let's just say, for example, FNGR squoze tomorrow, right? We got a short squeeze. Do you have a plan already set? Do you have your scale out targets already in plan? Do you have a plan in the first place? Do you know what regulatory halts or broker mechanics are? Well, let's go ahead and go over those details now and create a plan so that we can have an edge over a potential short squeeze. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an FNGR. Actually, this analysis is going to be entirely based around a plan for the sell time or the go time for a short squeeze, right? Do you have that plan already set? I'm sure that not a lot of people understand that there could be a lot of risk when it comes to a short squeeze, okay? Do we even know how long one takes, right? All these basic questions are some of the questions that often get ignored until the moment is happening, right? So, of course, we're still facing some market turbulence, right? There could be a continuation to the downside tomorrow before a recovery around Wednesday or Thursday, who knows? But we have to go ahead and make sure that in this downtime, we have a plan set. In the event to where this thing does squeeze, then we have that edge over the markets. Okay, team. So first of all, let's go ahead and set up some of the tools right here that can be used for your advantage. Okay, so we're very lucky here that we have already released some of those ARQ algos. So what I'm going to do here is I'm going to separate the chart into 3 panes. Okay, so why I want to do 3 panes is because I'm going to use several of these tools that are available to you when you do get in touch with us at that arqindicators@gmail.com. Okay, so you're going to see how you can use this to your advantage to guide you in the event to where this short squeeze does happen. Okay, so first of all, we're going to be loading up the very famous ARQ composure, right? This is the indicator that has given us several signals right here of manipulation, right? So this is a manipulation identifier, a trend identifier, a continuation to the upside identifier, and also it also has this huge huge red signal called a blood diamond, right? And that actually signals a potential sell-off. And of course, you can see that anytime that has printed, right, we have had immediate sell-offs, right, team? So let's go ahead and load up one iteration like this, right? We want to make sure that we can keep 2 time frames up in our view, right? So we're going to use a 4-hour. We're going to go up here to our TradingView platform. By the way, if you don't have a TradingView platform, go ahead and click on the link in the description below, and you can go ahead and start yourself with a free subscription. Try it out, see what it's like. You can also get a 30-day whole premium trial without any money down, right? And of course, they do have a free account as well. And if you are curious, you can use these indicators on a free account as well, with some limitations based on how many you can have up at the same time, right? But you can use it in the free account as well. Okay, team, so let's go ahead and open up this pane here. What we're looking for is essentially the 3 pane right here, like this, right? So we want to maintain here the let's say an immediate short-term time frame, right? Like maybe a 15-minute. Right, so let's go ahead and just kind of bring this all the way back here, right? So what we're going to do, okay, you know what? I'm just going to give you the context because I already have this set up. Okay, so we're going to use, and we're going to go back to the area where this thing squoze right here, right? So we're going to take a look at this simulation here for us to use for the potential scenario that we could be facing here in the next week or two, right? So we're going to use the 15-minute time frame. We'll set up here the 4-hour time frame, and we're also going to have another 4-hour time frame, but except this one, we're going to load up the indicator, the other one that is actually the smaller brother, or the younger brother of composure, and that is going to be the very famous ARQ armor, which this one actually has the very, very magical sauce, actually that actual sauce for the buy and sell signals. Okay, so remember, we are going over a simulation right now, and it is in fact true market data. This is in fact what happened, right? It was an over 800% pump to the upside on this squeeze for FNGR back in September 2022 to October. Okay, team. So we're going to take that, for example, as kind of a training scenario here. Okay, so we're going to keep in mind that yes, we're going to use the 15-minute and the 4-hour. If you want to use another time frame, go ahead. It's entirely okay. But the reason why we want to use two different indicators, in fact, we're going to use 3, is for the potential of a continuation to the upside, and also to see if the long signal is still validated as we move up, right? So the next one that we want to use is going to be, so for example here, you know what, we can actually put it within maybe this one here, and maybe the 15-minute, right? So we're going to use the other indicator that comes with your pack, and this is going to be the ARQ Enhanced MACD. And the reason why we're going to use the Enhanced MACD is because the MACD will tell us how the price action is essentially contracting or expanding, right? So meaning that in this squeeze event, you can see that we were very contracted, right? I'm talking about the clouds, right? These are going to be quintessential for us to look at during this event. Okay, so we have this huge contraction. They're very tight together, right? So as soon as we get this bull signal here, you notice here that we're starting to expand, right? It starts to expand, and that is naturally volatility expanding, meaning you're hitting the gas to the upside, right? You're throttling to the upside. So as soon as you start minimizing in that expansion, meaning contraction, it contracts, and then you get that bear signal, right? And then it sells off. Right, so this is why I'm saying that this is going to be essential for us. Okay, so anyway, let me just go ahead and set this chart back to normal, right? Because we're not going to be using this chart. I already have it set up perfectly for us. All right, team. So let's just go ahead and just get rid of composure here and make sure that this thing is ready for us to come back, so that we have the scale out process, right? And the targets, okay, based on several of our favorite influencers and what they've been talking about, right? So this is essentially going to be that session. Okay, so I know that this is probably going to be a little bit of a longer video, but go ahead and stick around, because this is absolutely going to be critical to your potential gain. Okay, so this is already set up for us to go, right? We have the MACD here on the 4-hour and the MACD here on the 30-minute. We can even use the 15-minute if we want. Okay, team. So yeah, you know what? Screw it. Let's just go ahead and bring up the 15-minute time frame, and let's go back to that area where the price action ended up squeezing, right over here, September 22, late September, to about October. So how long did this take? Okay, so here's that number one question people ask. Well, how long can a squeeze take? Right? How long can this go for? Well, in all reality, if we measure this last iteration here, we can see that this lasted about 6 days. Right, just almost 7 days. So that's not bad, right, team? So you can see that there is a short opportunity for us to make some potential gains on this, right? And I'm talking about, of course, our trading panel. We're going to load up our trading panel. We're going to load up the paper trade simulation here for TradingView, and we're going to make sure to practice, right? And practice with a huge short squeeze, right? For other future short squeezes when we learn how to trade properly, right, team? So yeah, let's go ahead and take that into account here. So first of all, I want you to know the signals first based on this, because right after we go over the signals here, we are going to go over the targets that can be looked at. Okay, so and I really do mean targets, team, because let's see here. Hold on just a sec. Let me just go ahead and suggest it. Hold on just a moment. Yeah, what I mean here is that I already have it kind of preset for us based on this chart on the other side, right? But I'm going to go ahead and explain it to you guys as we go on a better looking chart, right? Because that was kind of done in the live stream, and it could be a little messy for us. Okay, first of all, because we don't know where things may end, this is where composure can help you, right? So you know what? I'm going to go ahead and keep the MACD away from this one here, and we're going to use it better on the upper time frames. The reason why we have a 4-hour time frame is because we can relax here, right? We can relax and see if the price action is in fact, see if the shorter time frames are giving us false signals in the event to where we still have upside continuation to go, right? So the immediate short-term time frame, we're going to see this and observe price action as it goes immediately, right? And this is going to be the overall perspective for us. The reason we have armor on this side is because this is going to be essentially telling us if we have the buy signals or the long and short signals valid to wherever we are. Right, so we can leave this one also in an hourly if you want, right? If we can leave it in any time frame you want, but I can just go ahead and suggest maybe, yeah, I guess we can keep 3 time frames up, right? If anything, let's just do the 30-minute, right? So let's leave this one as a 30-minute, and we'll just go back right over here to where we had this this squeeze happen, right? So anyway, first of all, let's go ahead and take a look at this, right? We have one area of manipulation that it already gave us, right? So we're looking here, why is this being manipulated? So bam, the price action falls all the way down here, creating a shakeout, and then we have this enormous bounce to the upside, right? That is not our entry. Our entry is not this manipulation signal. The manipulation signal here is telling us that something changed in the markets entirely. There's some crooked stuff happening within the markets. Watch out. Usually a bearish signal. Okay, so we get that huge pump to the downside, and then the buyers are already ready, right? So they take this all the way up. You're starting to get these yellow diamonds. Those yellow diamonds suggest that there is a continuation to be expected to the upside. This blue triangle tells you that this downside here is already over. So the current trend is over, and this is ready to make a shift entirely to the upside. Okay, so this thing happens here. The next point would be considered on our entry right here. The yellow triangle pops up and it tells us that the EMA2 has crossed upside of the EM8, and this could be our potential entry. So what do? First of all, we want to make sure that we can validate with our indicators, right? So let's go ahead and take a look at the enhanced MACD. So right when this candle hit here, MACD was already telling us long right there, right? So it told us right at this candle here, let's go. So and it in fact didn't correct, right? This is based on the 4-hour time frame. So now let's go to the real magic sauce here onto the ARMor indicator. So right at that same candle, it looks like it also told us to long it, right? I apologize. So the enhanced MACD is actually telling us, which is very curious, right? Oh, it's the difference between the time frames. I apologize, right? So yeah, they're all telling us around the same area to long, right? So good, we get the long position and we start observing whatever we need to observe, right? So first of all, we're noticing that we're starting to expand. We have the expansion happening, getting wider and wider and wider, right? This is absolutely what we need. Right. And as we're going to the upside, you're getting false signals, right? The 15-minute time frame gives you a little tiny red diamond here suggesting that there could be a sell-off happening. It actually faced a downside, but not all the way. That is right where the 4-hour, right before that red triangle here is pretty much where we got that yellow signal and the blue triangle telling you that this downtrend is now over on the 4-hour. So when you're getting a downside signal, you're actually getting confirmation on the 4-hour that you're continuing. And guess what? You're getting the little yellow triangles to tell you that you are continuing to the upside. This is why we have the 4-hour to kind of relax, right, team? And we also have the enhanced MACD to give us a potential bear signal or short signal on that way up. So what we are noticing here is that we did get a bear signal here from ARCa ARMor, right? So that was about 164. And this thing came back down to around 137 and longed us right at about 171. That could have been a little bit of a loss, right? So we have to identify these things as a potential short. So now let's see if we have this short signal, how can we avoid it? Let's see the hourly time frame, right? Okay, great. The hourly time frame looks like it's going to have to be the one that we use, just like we had it at the beginning, but I don't know why I changed it, but whatever. Here we go. This would be the safer one. You can see that the long signal printed right down here, right where we said. In fact, this was a little bit earlier, way more aggressive too, right after that manipulation signal at the bottom side, literally caught. Let me see. No, yep, still right over here. It opened us up at about 78.54, and no other short signal printed all the way up here to about $8.10 from 74 cents. Okay, that's massive. That is absolutely massive, team. So on that way up, you're getting the confirmation that you're still continuing with these little yellow diamonds, right? And you're observing here, right? So you have this huge downfall in the immediate short-term time frame, but as price action moves up, blue triangle again pops up telling you that this trend is now over. We're set to continue to the upside. So it continues and continues, right? You still have all these yellow diamonds popping up telling you that signal is still valid. Okay, as soon as we reach the top side of the price action here, you're starting to get this little X mark, the little X, right? So notice here that you get that first X after a pullback, and that's when you start to get your first red diamond here. No red diamonds have printed, but except on the 4-hour time frame, you did get that, right? So also, let's go ahead and take a look at ARMor. Right where that red diamond is, short, bam. You can see it right here. I'm hovering right over it, right? Gives you that short signal. Let's get out. So of course, team. So then this thing just, if we entirely liquidate here, let's see what could happen, right? Because people are going to be like, what if this thing continues to $40? Well, we don't know. So what happens here? If we wait just a little bit longer here, just a couple more days out, a huge blood diamond appears. And then bam, price action fails. It starts to recover a little bit. Another blood diamond, huge drop again. And you're starting to see that right here. The blue diamond, the blue triangle comes up to tell you that this current upside trend is now done. And it is likely for us to start facing a downside. Now here is the cross of the EMA 8 with the red diamond or the red triangle. EMA 8 crossing below the EMA 2. Then we start getting all the little red diamonds, right? And it starts to continue selling off and selling off and selling off, right, team? So that's why I'm saying that it could be useful to get yourselves over to the ARC indicators email and shoot us an inquiry here so that we can go over the price points with you, right, team? So let's create that plan now. Let's go ahead and make that plan happen. Now that we know that we have the tools available for us to be guided towards the upside, to see where that potential upside can end, which clearly it did show us. It literally showed us right here that was the end of it. Huge, fat, enormous blood diamond printed right here. It has not printed literally for weeks, right? Until that point, right? So that's how you can tell. This is a very powerful algorithm, team. And also let's see, let's hover over this. Oh, check this out. We're getting that short signal right before that blood diamond on the ARC armor. So that's what I'm telling you, team. We actually have some pretty impressive algorithms here. And now let's go ahead and create that plan since we know what tools we're going to use, right? So let's go ahead and take some Fibonacci ratios. Okay, we're going to take a fib ratio from, let's see, from the overall range, which could be, let me just zoom out here just a little bit, right? I don't want to do it so close to the price action. So we're going to do it from that top side here to the bottom side of the range, right over there. Okay, right over here. What I'm doing here is taking the fib from here to here. Okay, and now we're going to take a shorter term fib, right? A shorter term time frame, a little bit smaller, right? So let me go ahead and see how we can do that. Yeah, so we'll take it from here. You know what? I'm going to go ahead and make it a little bit closer, and I'm going to take it to this, where the price point is right now, because that is the resistance that we faced, and that is also the invalidation zone. So I find that to be critical for us to keep into consideration. So let's do it like this. This is going to be our shorter term time frame Fibonacci ratio so that we can see what the potential targets to the upside can be. Okay, so you already heard me on the space call say that I may be looking at the targets of around $12.83, right? Maybe over $10, right? So you're gonna compare and contrast what you're gonna remember. You have to do your own DD here, team. All right, okay, so then we're gonna use the geometrics to kind of guide that potential upside. All right, so let's go ahead and set up the whatever holdings you have, all right? So whatever position we have on the paper trade, we're going to start to scale out, okay? So let's just say, for example, that the price action was here. Let's just say that we were at around 569, right? And 569 because we're in the golden pocket there. And right upside of the 0618, if you take a look to the right over here, we're within the golden pocket there. So it's between the 0618 Fibonacci ratio and the 0382 is where the golden pocket is located, okay? So it's a very bullish area to be in, highly likely to find a bounce from that side. Okay, so let's go ahead and measure a target to, let's say, to the $8 target, right? Which could be the resistance right over here. Now, why the $8 target when we're talking about such huge targets? Well, we don't know that, right? So let's just go ahead and see the potential first scale out area, right? So we can secure right here 44% gains, right? So we're gonna note this too, right? So let's just go ahead and put it down like this, just so that we know and we can keep track of whatever it is that we're trying to keep track of, right? So we'll note it down, okay? We have to keep the trading plan together. All right, team. So let's just say, for example, we'll do 12% out at $8, right? So we'll just leave it as $8 like this. Okay, and we'll also keep it noted, right? So let's just let me get rid of the border here, right? And put that there. Okay, so now we know that we have that in line. Okay, team, so let's just go ahead and put it just like that. Notice that it's getting, right now this is entirely, I'm not going to lie, team. This is making me really nervous. It's making me nervous because I want to make sure that everybody understands the implications of something like this. It could get dangerous really fast. All right, team, so anyway, let's go ahead and measure the next scale out, right? So now you're getting the influencer number 2 saying that you could be facing a $12 target, right? So, okay, well, let's go ahead and put our scale out there. So let's just go ahead and see right here from that 569 area that we were talking about, right? So right about here, right? Let's just go ahead and measure where that $12 target is. And it looks like the 4 spot 618, it's saying that we can sell at about 1223. Of course, we're not going to go directly to 1223, team. Let's just go ahead and take it a little bit lower, right? Let's just say maybe 1183, right? So we'll just go down below that 1223 so that we can secure the profit. We don't want to take the exact dollar amount, right? This first target at $8 is already just under. Look at this, 839 at the 2 spot 618. We want to be under that, right? So this is why we chose $8. Sorry, I just want to make sure that I can kind of clear that up first. Let's go ahead and make another trend line here so that we can keep this in line, right? So we're going to make a trend line here, right? And then we're going to type in there that, let's just say, for example, that in this area here, we want to take 10% out. We want to scale 10%, right? So let's do 10% out at 1180, it actually measured at 1184, right? So 1184. Okay, so we press OK, right? And these are going to be the things that you're going to have to study in and out and memorize them, right? If you don't have them memorized, make sure to have them written down next to you somewhere so that when the time does come, you are ready to go, right? So let's go ahead and take the next measurement here, and we're going to base this off of the other targets that more influencers have talked about, right? I'm just going to go ahead and consolidate here as much as I can for you and for us, right, so that we can continue. Okay, so I've already heard some people talk about a $20 target too. Okay, so let's take that into consideration here. 469 bottom, right, 569, sorry. And then we get that up run here to about the $20, right? So let's just say $20 could be right over here. Check it out. The 2 spot 618 located at about 2104. Let's go ahead and maintain ourselves under that, right? So let's just say that we want to sell at $20 with a few cents, right? Let's just say that that's about $20.16. That's already, look, that's already 254% up. At this point, we could probably get a little more aggressive into the scaling out that we're facing, right? So let's just say that at this point here, we want to pull out 40% of our holdings, which would guarantee a pretty nice run, right? So 40% out at 2036, I guess, right? So at 2036, right? So we're marking off the plan. Okay, team. And now let's just go ahead and say that there could be one more target. Remember, I was in a space call too, and I was saying that I'm sorry, in one of my videos, I mentioned that I didn't want to talk about the target, right? I didn't want to mention that target out loud because it could be a little too frothy for us to look at. I don't know, whatever it is. Let's just go ahead and kind of put it into perspective here, just because we're doing a simulator trade, right? This is just for example. So let's go ahead and take into consideration 38.46 instead of that $40 target right at the 3 spot 618. Always, let's just go ahead and make sure that we can secure the profits and sell just a little bit under that true target. Okay, team. So let's go ahead and mark off our line here, right? And at this point here, I think that we could, well, let me take a look at my notes so that we have this all in line, right? So at this point here, let's just count it, right? So we have about 22, we have 40, we have 40, 50, 62% already out. I mean, that's not bad. So at this point, let's just say that we removed another, let's see, 62. Let's just say that we removed another 20% out, right? So 40, 50, 60, 70, 80%, 82%. That leaves us with 18% left, right? So let's just say 20% out. Let's do it like this. So 20% out at, what is this? What did we say? 40 or 38, the hell, 30, what the hell was it again? Let me just measure it like this. 38.46, right? Cool. So let me go ahead and double click that at 38.46. Okay. Now, a lot of people are saying that, yes, that I don't know this number for myself, team, but, you know, we've had our influencers talk about the 160 million short shares, right? So because we don't know that, what we could do here is that since now we have 18% of our holdings left, we can leave those as runners. Right, so I think it was maybe Ham that pointed out the 163 or 160 million short shares that are printed, right? The synthetics, the nakeds, which are being used for criminal activity, right, team? So what I can say here is that I believe William Ferrand, he talked about a potential $70 target. right? So what do you know? We have the 4-spot 618 located at about 79.23. So let's just go ahead and humor the 70, but let's do it at $68 because as you get into that target of like when you close a new let's say when you close a 60 to 70 or 40 to 50, 50 to 60, those are all psychological targets, right? So let's make sure that we don't get close to the $80 target, right? So let's make sure that we actually close below that. And to be perfectly clear, we could probably do 67.47, right? So from here, 67.47, I haven't done the other metric here, but let me just do this first. It's okay. So 67.47, we'll just go ahead and mark off right here that this would be 18% out and full liquidation. Okay, and that's going to be at we said 67.47. Right, so 67.47. The reason why we're doing it like this, team, is so that we can guarantee profits, right? So we can make sure that as we scale out, we have our profits in line. Okay, so now measuring that top side here, team, let's say from the 569, right? We were talking about 569 right over here, and let's take it to the upside like this, and bam. That would mark off 1,086% to the upside. We're not sure if it can get there, but we have the plan and we have the scale out areas where we can pull out the profits, and we also have the runner's range, right? So we'll go ahead and name this the 67.47 as parentheses runner's range. Okay, so we'll leave it like that, right? And now we know, and also maybe even color this a little bit different, right? So that you can be aware that this is probably going to be the zone to where we don't know if it can reach there. We don't know if it can go beyond it. We don't know if it can go 300, 100. I don't know, right? But what I can see here are logical targets, right? So this is how you set up a plan, right? You get your tools together, you grab your targets, you scale out whatever you want to scale out on these targets on the way up, and then you have your plan ready for whenever this happens. If something changes along the way up, we have to make sure to create alternatives to this too, right? But we have our bases done. All right, team. So that is how to create a plan for a short squeeze play. Market mechanics suggest that, right, we can actually pull that up. Yeah. So, I can actually just tell you. So market mechanics suggest that brokers or exchanges, they tend to have, or they tend to favor the market orders because that is an execution that requires immediate attention, right? So immediate sell. When you are facing high volatility times, which is literally this, right? What happened in the previous chart, you can clearly see that the price action jumps up and down so violently, right? So that's something that we're going to have to keep in mind here too, team. Let's get rid of the composure so you just can see, right? So you're getting massive gap ups, right? So from this area here, we're at 190. We ripped from, remember, 70 cents to 190. Imagine this, 190 to 137. People are thinking it's already done. Right, and then your next swings over here. You're looking at another, let's see, $3.80 or 75. It drops all the way down a whole dollar, $2.80, and then you rip again. And look at this right here. So you get that top side of about $6.21 and immediately drops to $4.51. What are you going to be feeling during those times? This is why I believe that these tools can be helpful for us. Right, team? So we don't get that heart attack. So we don't feel and say, ARCa, you never should have followed him. He sucked. Right. So I'm just saying that when high volatility times come in, there's going to be huge swings to the upside. We're talking multi-dollar swings here, team. Okay. So I mean, look at this right here. It went up all the way to right 992, then dipped all the way back down from 992 to $5. And then from the $5, it went all the way up to 940. Oh my God, team. No way. That's a lot of pressure, right? We want to make sure that we have the plan set up and we have the tools ready for when this happens. Okay, team. So this is pretty much what I just wanted to talk to you guys about, right? I spoke to the team in the live stream today and I said, should I put this out? And they said, yeah, why not? You know what? That would be incredible for retail, for them to know how this potential play could happen. Okay. So team, that's just how it goes. Okay, you guys. Just please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, 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 very good night. and I will catch you at the bell literally mañana. Adios.